Good afternoon, people. Welcome to another webinar session by STL. And today we are going to discuss trading economics from the perspective of a trader. So apologies for being late, the delay. And thank you for attending. If it's your first time to attend, and thank you for your patience. Okay, I hope you guys can see my screen. Just shared it. I hope everyone can see my screen. If you can't, just indicate. Okay, so trading economics affects trading economics for traders. And before we proceed any further, I would like us to take our time. I'd like everyone to take his or her time and go through this risk disclaimer very quickly. It's very, very important for you to know this before you start trading or speculating in the market, whatever it is that you want to do in the financial markets. So I'm gonna let you guys read through this, go through this the next 1 minute. So there is disclaimer. Okay, I believe we have all gone through it and we know what trading is all about in terms of risk. So economics for traders. Before we proceed, there's two things I would like you guys to keep in mind, and these are some of the wisdom from some market practitioners and speculators. So speculation is nothing more than anticipating coming movements, and in order to anticipate correctly, one must have a definite basis for that anticipation. But one has to be careful because people are often not predictable, they are full of emotions, and the market is made up of people. And also the trend is the basis of all profits, by Richard DeMille Wyckoff. So simply, in this lesson, when we discuss about economics and how it relates to trading, the information that we're getting or what you're going to learn as a new trader, this is important, especially if you are new in this business, trading is a business, is that how can you be able to leverage on what you know regarding economics from a trader's perspective in order to anticipate coming movements. Please note, it's not in order to predict, but in order to anticipate and simply react accordingly. So the trend is the basis of all profits. There are trends everywhere, even outside the markets, that is outside the domain of trading. We have fashion trends, I suppose, trends on technological trends, industrial trends. And if you're in alignment with those trends as a businessman or woman, that is how you'll be able to find ways of extracting profits if you are in alignment with the prevailing trends. So the same concept also and rationale applies when it comes to trading the financial markets. Now, what is an economy? For the purposes of trading and playing the markets, I have borrowed the definition of an economy from a gentleman known as Ray Dalio. And an economy is simply the sum of transactions in all markets that make up that particular economy. Buy and selling transactions, that is obviously what is happening in the markets. People are trying to buy and sell goods of each other, and money is flowing, bargains are made, products are created, things are manufactured because of those particular transactions. Because there is a demand and there is also a supply aspect to things, transactions will eventually tend to happen. And so the economy is simply a sum of all those transactions. It's important to have this vital information or knowledge as you're starting out your trading journey. From a trader's standpoint, traders are more concerned with economic data indicators. That is what traders are primarily concerned with. They're not concerned with economics from an academic perspective, really, but what will economics be able to show them? That is economic data. What it will be able to show them in terms of gauging any assets trading environment. And because today is Forex Fridays, obviously I'm talking about assets, I mean currencies. Trading environment might either be bullish or bearish. So the indicators will be insightful inputs for anticipating how a tradable asset is likely to react to changes. So likely to react to changes in the trading environment. So that is simply what you are really trying to do as a speculator who is using these economic data indicators. And your core duty is figuring out what others will do and reacting to it. What others will do, or what others, the current state of what other participants are in the market, that is what you are referring to a trading environment. So traders must put together all vital economic indicators and come up with models that assist in understanding the trading environment that particular asset is trading in. Then the act of doing that simply involves categorizing the data depending on significance. It's not just all types of data. So the first thing that you're going to encounter, the first challenge that you'll encounter once you begin your trading is you'll be hit by a barrage of information from all quarters. How do you determine which information is significant, which one is not? How do you separate the wheat from the chaff, simply put? So central banks will be very, very instrumental in helping you do that. And as you can see, I've said indicators that will most likely be significant to market participants. You can have other things that will be significant to market participants which have not necessarily been disclosed by central banks. So how do central banks do that? How do they disclose the economic picture or macroeconomic picture in order for one to determine an asset's trading environment? We're going to talk more about central banks much later on, but as a side note, central banks usually issue out monetary policy statements and reports, and central bankers will usually point out, depending on their mandate, given their mandate, sorry, not depending, but given their mandate, what economic data inputs or indicators, they are paying attention to. Are they paying attention to employment, for example? Are they paying attention to the health of the consumer? And so what will help you know which aspect of data is more significant, so that you can be able to track it without any confusion. So having said that, let's carry on. A good trading plan. You should have a trading plan. When you come into trading, it's a business at the end of the day. Speculation is a business. And another thing I also forgot to mention, but let me just mention it in passing, the term indicators. If you are new, I believe I'm addressing people who are new to trading in the room. By the way, welcome to trading. So if you're new, you will come across the terminology indicators a lot. You will come across it a lot, the term indicators. Indicators, when it comes to technical analysis, fundamental analysis, you will come across indicators. So you better get used to viewing economic data as forms of indicators too. Now, as I said, a good trading plan puts economic data indicators in perspective, and this will form an important piece of your trading plan. So you must have a plan, and a piece of that plan, whether you are trading based on, whether you are purely a technical trader, the people who are purely technical, that is purely price action traders, it's also important for them to have a glimpse of some economic data indicators so as to know what will basically affect their trading plan or their trading methodology or style, where, for example, any economic data coming out, whether it will tend to have high volatility, which will affect their trading plan. What we are going to do in this webinar, I'm going to give you guys a basic framework for fitting economic indicators together. Just a simple basic framework. But as I've said, not better. It is not the end of it all when it comes to economic theory. Economic theory is quite expansive, but this framework is simply aspects of economic data which traders are mainly concerned with, and not the whole entire body of economics. So basically a framework for practical reasons here being trading FX or trading currencies. So the first indicators to pay attention to, we have jobs, that is labor market indicators. Very important to look at jobs and job creation. They're the keys to the medium and long-term economic outlook for any particular country. And usually signs of broader economic growth will be seen as tentative or suspect unless job growth is present. And this is quite a phenomenon that is very prevalent now, in these times that we are in, when the world, most major economies in the G7 area are recovering from COVID. Some signs of economic growth are out there, but jobs are not really growing. So quite suspect. Now, the labor market strength is seen as positive for our currency because it indicates positive growth going forward. Remember, your job as a speculator is to anticipate on future probable future outcomes going forward. The market itself is forward-looking machine system, and any indicator that you're looking at, if it's in the labor market indicators, that is what the question that you're trying to answer is, what does that portend for the near term or longer term future? And simply you're trying to make deductions as to the potential for higher interest rates in the future, because interest rates, basically the central bankers will have to hike interest rates in the future in order to curb what we call wage growth inflation, and currencies like high interest rates. We're going to mention about that also. So what are these economic indicators for jobs, for instance, to pay attention to? There are various, there are very many out there, but we're going to focus on a couple, and they are basically interpreted in a similar manner throughout. I mean, across all releases from different countries, they basically mean the same. So in the US, we have the non-farm payrolls, which is exclusive of farm workers, private household employees, and non-profit organization employees. So payrolls for all workers, in exclusive of the ones that I've listed there. And the other data point is unemployment rate and average hourly earnings, which measure the change in employee wages, and an indicator that tells if incomes are rising or falling. very, very important to be able to determine whether incomes are rising or falling, even if jobs are being created. If you look at non-farm payrolls, and they're usually pretty much released at the same time. So jobs might be created, but that is not having an impact on incomes. And so it will not have an impact on the life of the consumer by simply affecting the consumers or consumers' spending habits. So, um, well, there's a chart I want you guys to have a look at here, and well, forgot to indicate, but the source is simply Bloomberg for this particular chart. So the thick line that you're seeing, that is the S&P, that is basically the stock market benchmark, specifically here the S&P 500. And this is the dotted line presents a change in private payrolls. So point is, every time you see there is a very sharp turn in private payrolls, you also see the market sort of tends to follow suit. Sharp turn here, markets tend to also trend lower, and the same case in various turning points that you see all over this particular chart. So that shows the correlation between payrolls and the market. It doesn't mean every time if payrolls turn or change, you also just jump in and start selling. It doesn't mean that. It is not a signaling tool or mechanism. When you look at this chart here, it's not simply, but well, it's a signaling tool, but up to a particular extent, to the extent of telling you which environment the market will tend to be, depending on payrolls data, on the trend of payrolls data. Remember, I say trend is basically the basis of all profits, even when you are studying economic data trends. So you can see this particular correlation. Also, when it comes to volatility, in major dollar currency pairs, also the source for this is also Bloomberg too. Here we have the non-farm payrolls days range being greater than the 5-day ATR. ATR means average true range. It's basically a measure of volatility. This is the NFP day range, less than 5-day ATR. Now you can see when it comes to the dollar index, the kind of volatility that is experienced, 73% of the time, the ATR is usually more than 5. You can see here, it's only 27% of the time when the ATR is less than 5. So for the Euro USD, 64%. So if you are trading these particular currencies, they tend to respond to employment data, and in this particular instance, non-farm payrolls. Moving on, the next data point is the consumer. But before we proceed with the consumer, I would like to show you guys, for instance, how to fetch data or how to look up those particular indicators. So simply go to Forex Factory. It's one of the websites that I use, quite a good tool. And you can decide to open an account if you want to. Simply just go to Forex Factory, then the economic calendar right here. So I'm going to make a few adjustments. You see today is May 28th. And I'm going to go to last month up to, well, December. Okay. And I'll apply these settings. This time period. Then I'll simply come here. You can simply come here and filter out. If you want to check out employment data or employment economic indicators, so you can simply come to this filter section, filter out. If you want to see for all currencies, means all currencies that trade actively, and the event types, where you can be able to track those economic indicators. Event types meaning releases, economic data releases. These are the events that we are talking about. So I'm just going to untick these ones here. Then I remain with employment only and apply the filter. And you can see all of them, which basically affect the United States, and the ones that are most important and the ones that are least important. So even in the filtering section, you can be able to filter the ones that have a high impact. You can see this red folder, and ones which have a medium impact to ones which have a low impact. So let's see the ones which have a medium impact and the ones which have a high impact. And these are the ones you can see: US non-farm employment change, unemployment rate, unemployment claims, also quite important to track unemployment claims. These are basically the number of people who are unemployed and they're seeking out insurance, unemployment insurance. You see Australia also, they have employment change and unemployment rate. In the UK, they call it a claimant count change. Claimant count change is simply the same as unemployment claims. So you can have a look at all that data. If we go down here, you can be able to see more. For various countries, you can see even for New Zealand, they have their unemployment rate. So simply, that is how you will track data or economic indicators that have to do with jobs. Okay, so we shall go back to the presentation. And yeah, we were talking about the consumer. No, we were to start with the consumer. So GHFX is overwhelmingly driven by personal consumption. So these economies are largely consumer-driven economies, and personal consumption will account for 60 to 70% of economic activity. So the personal consumption, sometimes known as private consumption, personal spending, it simply refers to how people spend their money. And what you're trying to gauge is whether they are spending more or less, and what's the outlook of their spending. Simply, that is what you're trying to gauge. Is the spending going to increase, decrease, or stay the same? Those are the questions that you aim to answer by tracking what we call consumer surveys. So consumer surveys basically are the economic data indicators, okay, that are able to give you a picture of the health of the consumer. So for example, if there are more jobs, for instance, and higher wages, that means the consumer's spending rate is going to increase, and that is going to have an impact obviously on inflation. And because the mandate of the central bankers is to take care of inflation, of course they're going to notice that, and they'll start thinking of hiking interest rates sometime in the future. So the thing is, as you're tracking these indicators, you're tracking to see, number one, how is the indicator behaving? What is it telling you about the picture of when it comes to the health of the consumer? And most importantly, also, is it significant? I mentioned how to tell whether something is significant or not simply by understanding and going through central bank monetary policy statements. So let's go and check out consumer surveys. How do you basically find data to do with the consumer before we go to the business sector? So the consumer, again, just like we had done earlier, we have a filter here, and you can see we have consumer surveys there, and just apply the filter. And the consumer surveys that we are obviously trying to keep track of, you can see, for example, this month, in April, there was really no data coming out regarding the consumer. So it was only on Friday, on the 16th April. It was only okay several times. Sorry about that. So we have the University of Michigan consumer sentiment, a very important data point that is considered. And in fact, if you come here, open up this folder, you can be able to get all the details and why this particular data point is or economic indicator is very important. You can see what it measures here, and the usual effects that it will tend to have, and why do traders care. You see, financial confidence is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. So leading indicator. Okay, great thing in fact that it is a leading indicator. So it is basically compiled by the University of Michigan. Okay, so there is that for the United States. We also have CB, consumer confidence, the conference board, consumer confidence, of course, government board. And you can see that it is released monthly in the last Tuesday of the current month, and it measures the level of a composite index based on surveys of households. So survey of about 3,000 households, which ask respondents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. Okay, so let's go to another month. So that is the US. Let's see whether the calendar will give us for other countries. Mostly the US. So we mainly have the US, but simply just come here, as I told you guys, and do the filtering, especially if you are new. So let's move on to the next indicators to pay attention to. So we have business sector indicators. And businesses, obviously, they make up a third of overall economic activity. Quite wordy this slide. And because they contribute directly to economic activity through those particular capital expenditures, manufacturing, building factories, stores, offices, buying software, telecommunication equipment, etc., etc. They hire also, meaning now again, the issue of jobs tends to come up. And in the process of doing that, if it also contributes directly, business sector activity contributes directly towards producing investment opportunities. If people earn money or salaries, other people also tend to invest. So now, though the manufacturing and export sectors are significant in other economies relative to others, they're significant in other economies relative to others. So some nations are export driven. They really depend on exports in order to earn their foreign income or foreign exchange. Some nations don't really depend on it as much. And you see an example, the United States, that manufacturing, exports account for about 10 to 15% of overall activity versus a country like Japan or Germany. So those countries, any manufacturing activity will tend to have an impact, a huge impact on the currency pairs of those particular nations that have to do with manufacturing and industrial production. So important to monitor these things, manufacturing, industrial production, in order to evaluate how the business sector is doing overall. Also, there are surveys, sentiment surveys that give traders or speculators an understanding of how how the business sector is doing. So we're going to look at that before we proceed to the structural. So what are these economic indicators that tell us or give us indications as to how things are doing from a business sector perspective? So we have business surveys here, as you can see. So I'm going to click on business surveys and apply the filter. This is very simple, guys. If you are trying to come up with, you're trying to use this model to build your own framework for tracking all this data. So as I said, you can come to the filtered business surveys, and you can see the ones which have a high impact, low impact, medium impact, low impact. So I've filtered out the ones which have a high impact and the ones which have a low impact, which basically you can start tracking and journalizing these particular data releases so that you can be able to tell the trend. And you can see we have several surveys. We have the ISM manufacturing, ISM manufacturing purchasing managers index survey. Okay, released by the Institute of Supply Management. Very important. And it surveys about 300 purchasing managers, asks respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventories. Basically, whether anything is ongoing in terms of, are people ordering, or are there new orders coming regarding some, you know, machinery, tools, and such things which are important when it comes to doing business. Supplier deliveries and also inventories. So good to also track that kind of data. The ISM, so we have services, we have for manufacturing, we simply have PMI, IV PMI, this is for Canada, conducted by a body called IV. We also have, business sector surveys in New Zealand. You can see, for example, the one for New Zealand and Australia. Another one in US is called the Philly Fed Manufacturing Index. In the Eurozone, French Flash Services PMI. We have also manufacturing PMI for France, that is Germany. You can see those ones basically have this red folders, meaning they have a very high impact. So important to track them down. And Germany obviously is the biggest. It has the largest economy in the Eurozone, so any important information coming out of Germany to do with manufacturing, it's vital to keep an eye on. Okay, so moving on, let's have a look at the structural indicators finally. So structural, they'll paint a picture of the overall economic environment. That is basically what they'll do. So sorry about that. So and what are these structural indicators? And they will form the basis for currency trends. Very, very important to note that, especially if you're a long-term or a medium-term trader, you would want to know whether the trend that you are seeking to profit from, remember, I say trend is the basis of all profits, whether it's being driven by this, what are the structural economic indicators saying? What are they communicating, so that you can be able to anticipate as to whether the trend is going to be sustainable in any manner or form. So we have inflation, growth, and trade balance. Well, inflation tells us whether how fast prices are falling or rising, and it is important for anticipating the direction of key interest rates. Key interest rates basically here the cost of credit, you can say simply the cost of borrowing, which is set up by the central bankers, depending on how the market environment is, or how economic data is shaping up the market environment. So determinant for key currency, so it's a key determinant of currency values, but remember, as I've said, indicated here, not the only one. So currency values can also be determined by a lot of exogenous factors which don't have to do with inflation directly. And growth, indicators of growth and overall economic activity, they are important for measuring economic growth and expansion. Is the economy growing? Is it expanding? Are more jobs being created? Is the health of the consumer good? And growth, measures of growth are things to do with, for example, the gross national domestic product, measures of GDP, GNP, and such. And they serve as a key input also to monetary policy and interest rate outlook. Then we have trade balance. Well, you use trade balance to evaluate the indicators to evaluate export and import trade of a particular country. Very, very important to note that when it comes to export and import trade. So A country, for example, which has a deficit, meaning the imports, for instance, are more than the exports, meaning that country is losing out when it comes to trade. So more of that particular nation's currency is sold, okay, so that more exported goods can be bought. That is now a country that has a deficit, a trade deficit, that is. The currency of that country will tend to be affected negatively. Important to check that, and vice versa. Now, that is principally the rule of thumb when it comes to evaluating trade balance. Finally, we have fiscal balance, okay, when it comes to main structural indicators. So finally, you have fiscal balance, which is simply the current revenue, the difference between the current revenue and current expenditure, and it might be positive or negative. Okay, and this will be an important way of knowing whether a country has a budget surplus or budget deficit. The many data points are used to determine that, but the most important one is obviously a nation's budget, and the budget is being read when budget statement is being put out there. That is simply how you can be able to determine this fiscal balance, whether it's positive or negative. So a rule of thumb, basically, countries with high debt levels run the risk of a weakening currency and vice versa. But the thing is, the US has a high debt level, but the dollar is obviously a global reserve currency. And besides from domestic demand for the dollar, there is also a global demand for the dollar. And the dollar that is not used domestically, the ones that is out there globally, let's say, for example, in the reserve, which is being held by other reserve banks out there in the world, besides from the Federal Reserve, those dollars are known as euro dollars. They're known as euro dollars. That is just by the way for you guys to note. So let's have a look at those indicators, economic indicators that will be able to paint a picture of, us, which will be able to give us a structural picture of the economic situation. But before we go there, to conclude, we have seen it's important to watch jobs, the consumer health, okay, structural health, finally, and also the business sector activity. So you can build a framework based on that particular approach on those three points or concepts, and you can be able to track the data depending on which uh, you know depending on which type of data is significant, whether it is data to do with consumer, whether it's data to do with jobs, whether it's data to do with structural economic indicators or business activity. That is the business sector activity. And in order for you to simply know which is significant, check out for monetary policy releases and statements, and also meeting minutes for various central banks. We have the European Central Bank, the Bank of England, the Bank of Canada, the Federal Reserve, the Bank of the Reserve Bank of Australia, Reserve Bank of New Zealand. All this information, they give it out there through their reporting and monetary policy reports. That is, you will be able to glimpse in your framework what will be the important data indicators to look at within your basic framework, and how to now anticipate, depending on what you're seeing, the trends that you're seeing, how will you anticipate shifts in market environment. Okay, so it's not a signaling mechanism, but simply for the purposes of anticipating. So let's just go right away and check out everything to do with structural indicators, how to basically assess them, to find them. We have, you can see we have central banks, okay? We also have bonds. So central banks, we have inflation and we have growth. Okay, another important indicator that I did not mention has to do with housing. falls under the business sector too activities. So let's apply this filter very fast and have a look. Okay, so sorry, I think I still have the employment on. So central bank, inflation growth. Okay, good. Okay, so we have I don't know why the average hourly earnings keep popping up, but it's okay. So we have the bank statements, for example. You can see the Reserve Bank of Australia rate statement. We have the cash rate, which is, of course, the interest rate now. We have a FOMC meeting minutes. This is now, when you go through the minutes, you get to have a glimpse of what the central bankers are thinking in terms of the data points that are significant and which data points they are assessing or looking at in order to determine the next course of probable course of interest rates in the future. So financial stability reports, also important when it comes to understanding the structural picture of a particular country, of a particular economy. Now, for inflation, CPI and core CPI, these ones are very, very important. This is basically, as you can see, have a look at it. And what it simply measures is the price of goods and services purchased by consumers. Are we seeing higher prices, lower prices, that type of inflation? And it's important, as I said earlier, to understand what is causing that inflation. It might be, driven by wage growth. It might be driven by excess money in the system through fiscal policy, for example, through bond purchase programs, that is quantitative easing, or in other words, if you do not know what quantitative easing is, if you are new, it's simply the government, that is governments printing money. It even sounds hilarious. But yes, guys, it happens. And if there is more of that money in circulation, that will tend to have an impact on inflation. And obviously the future outlook for interest rates. So CPI is important. We have CPI, we have core CPI, different types of CPI. And the central bankers will be quite clear which type of CPI they are paying attention to. So also for determining inflation and growth, core retail sales are important. How is the health of the retail sector, excluding automobiles? And the prices of the activity of the retail sector will tend to also have an impact on inflation. Okay, GDP, and this is GDP for China. And we have CPI also for New Zealand. You can see retail sales for Australia. They simply are similar in terms of how they are named. Press conferences by central bankers, retail sales also in the United Kingdom. Very important to follow all this information. And as I told you, and as I said earlier, there is no need to feel intimidated by all this information. It's simply because when you have a framework, as I have outlined it, you can be able to know from your framework which indicators, which economic indicators, not from your framework, but from simply tracking the conversations that the central bankers are having, reading their statements. They will be able to guide you as to what data inputs or economic data indicators to pay attention to when it comes to what you have in your framework. Acts as guidance. Okay, I don't see nothing much here, but well, it's the same things as you can see. There is GDP, preliminary GDP, main GDPs, industrial production also, part of it, core retail sales, and you can see all of it, just repetitive across the board. So today, for instance, or this week, we had several monetary policy reports and hearings that happened across the board. across the board. So to conclude, guys, putting together a framework whereby you have segmented the data that you're going to look at, and your framework basically consists of tracking things from the aspect of jobs, number one, consumer sentiment, or health of the consumer, number two, and the business sector, finally, inflation, growth, trade balance, and fiscal balance. As I said, fiscal balance, simply following budget statements or budget reports, keeping, being in track with all those things. And so these things will be able to help you anticipate a particular trading environment, whether a particular currency is going to trend or not, and how you're going to execute and go about that. Now, that has to do with technical analysis. So that's it. So if you are new to trading, that's simply it. If you have ever felt intimidated by fundamentals, that's simply it. Having a framework and following your framework. And so even when you're following news releases, even when you're following news websites, for those who have been, into trading for quite a while, you know which type of news is much more important to pay attention to, not just any, because you have your framework and you know what to look at. So with that, I will take any questions if they are there. And thank you for making the time, guys. I don't think there are any questions. So guys, you can always feel free to request for this presentation if you wish. I can't see any questions, and I hope you guys have been able to see my screen. So with that, it's 3 o'clock right now, meaning an hour before the market opens. That is the stock market. Actually, the stock market opens at 4:30, an hour and 30 minutes remaining. So happy trading. Watch out for that volatility, and happy preparation in your trading. So remember to join Scope Markets group community of traders. And if you want to open a trading account, it's very simple. Just go to Scope Markets website, and you will, you can be able to open an account there. Let me check and see whether I can be able to access that. Just Google Scope Markets. And there we are, very quickly. Response. So you can register now. The website is quite simple, and you can see everything that is offered. But before you even go and register an account, just know that Scope Markets already is a registered a broker, duly regulated by the Capital Markets Authority. Very important to also be aware of the risk disclosure statements when it comes to trading margined products and CFDs. So you can open an account, you can register now, and basically trade any type of asset instrument that you wish to trade. For our case, we have Forex, which is obviously the most liquid market out there. Process is very simple. Funding through your M-Pesa if you want to, and finally downloading a trading platform. So there are various trading platforms for Windows, Android, Apple. In fact, you can go ahead and download a trading platform at first if you want to, for basically all types of operating systems. So thank you guys for attending, and have a good weekend.